Good morning, everyone. Bob Ichino here from Path Trading Partners. Mike Arnold is here as well. Another morning Path Chat on FX. A couple of quick things. Article 50 vote. UK's Parliament voted in favor of giving Theresa May the power to trigger Article 50. That is Article 50 of the Lisbon Treaty, which would start the process of it's a 2-year process for the UK to leave the European Union. It has to go to the House of Commons still. The House of Lords. House of Commons is what approved it yesterday. Theresa May promised lawmakers that they'd get an early vote, so it should still happen sometime in March. It's at least going to go to the House of Lords prior to the end of March. Donald Trump wrote a letter to China. We don't know the contents of that letter yet, but it's interesting that that's the first communication he's had. He wrote a letter, not a tweet, an entire letter. In that same period of time, the yuan has actually risen this year about 1.4% against the dollar, which kind of puts the Chinese as a country that manipulates their currency, labeling them as a currency manipulator, in a bit of turmoil, because it would not have been able to rise if that were the case. It fell 4% last year. It's risen about 1.4% so far this year. Things coming up this morning: we've got jobless claims in the U.S. We've got Canadian new housing price index, and we also later on this afternoon have the Royal Bank of Australia's statement on monetary policy, and then tonight, overnight, Japanese tertiary index, the industry part of the tertiary index. So some things going on, but I'm going to turn it over to Mike to let you know what he's seeing in terms of price action.
Okay, great. Thanks, Bob. Good morning, everyone. A lot of the currencies are in a defined range, trying to figure out which way to go next. So there's not a lot of big term moves. A lot of things are scalping. You can see on the euro, US dollar, we have overhead resistance around this 107.15 to 107.20 area in there. We have key support around the 106.42 level, and then down around the 106.20 level. If we stay in these tight ranges, this will eventually be a trend line redraw. I'm going to mark this off the way Bob does with the dashed line, because it's not confirmed yet. So that's how we will leave it for today. All right, so I've now marked it off as a dashed trend line. This is not yet confirmed as a trend line, but it could be. Let's take a quick zoom out and look at it on the macro level. It's really going to be key. What we're going to be watching for probably next week, if these levels hold, is eventually a move below this week's low or a move above this week's high to really define the next area it's going to. We have potential trend lines on the downside, potential trend lines on the upside. You can see how the moves tested both ends, and now it's trying to figure out what to do next. The pound, again, we did not trigger that double bottom. I've already redrawn lower trend lines. We're back in this range. We've now tested this upper significant level, 125.72, and fallen off from there. We have support from this sort of flat but somewhat rising rotation zone. Really nothing we can call out. Everything is, you can use these levels and possibly scalp off intraday, but nothing we're really looking to do on a daily basis yet, or a weekly basis. The yen, you can see how these levels, which have been on our charts now for a while, how significant they are, and they continue to be key resistance and key support. We're going to have to get out of this area. We don't have our trend line redraw just yet. If we do break below this 111.64, again, watch for the 110.63 level. If we get above the 112.74 level, you could really watch for, again, resistance at these prior highs in here and the declining 21, which is about 113.44. So we have lots of overhead resistance too. Swissy, we've retested multiple times this 21 and fallen off. We're testing it again now, and then you have the parity mark above there, which is major significance. Below, we've tested the 99.42 or 43 level multiple times. So that's key support. Again, you have key resistance, key support, nothing else we can do. If we do break lower, You still have this trend line and rising 200. If we do break higher, then you can run straight into the 50 exponential and these prior key highs and key closes around the $1.2930 mark. So again, there's not a lot of longer term targets we can call out, just short term targets. Aussie, watching on the weekly, come down, tested the trend line. We still need to get above the 76.79 or 76.80 level on a closing weekly basis before anything happens. So we're watching that on a larger scale to see what goes on with that. Let's throw the Canadian dollar in here. We have what's called a bear flag, initial move down flag. If this plays out, first of all, we'd watch for a retest of these lows. Some people look at this as double top. It does not fit in our high probability parameters, but if that doesn't fold according to other traders, it would target the bottom of this, which we're looking for possibly for a bear flag. This is a very sloppy. We can do these measurements later if we continue lower. There's nothing else I'm really seeing besides this key defined channel that we've now broken down below. So you have your moving averages above here, and this lower channel line is now resistance. That's about all I have on the currencies. We're going to have to really wait on all of them. We're sort of in reassessing mode until they start defining their next moves and key levels that we can trade off of. Back to you, Bob.
Thank you, Michael. PathTradingPartners.com. As always, Money Path Podcast. You should probably listen to the last one. We're going to record a new one tomorrow, which will be released on Saturday. Again, just go into your iTunes search bar, The Money Path Podcast, or you can find it on our website at pathtradingpartners.com and shoot us an email if you want us to cover something. Cheers, guys. Have a good morning, everybody.